Now, you're anticipating a U-shaped recovery for the region, which is conditional on a services recovery. Given the impact on mobility across the region from these virus curves, what kind of path are you sketching out to move out of this services recession?
Well, it's been, it's been starts and stops. So I think ultimately it hinges on the vaccination rate crossing, certain thresholds, 50, 60, 70%. Because I think ultimately the services recession is tied to the lockdowns. And I think governments will only be able to relax some of this when the vaccination rate reaches those kind of rates. And that's still, for Singapore, it's probably a month away. But for Malaysia, Thailand, it could be early next year. And I think, unfortunately, at the current vaccination rates for the other countries like Indonesia, Philippines, it's really looking like it's going to be the second half of next year.
Now, the Fed has maintained a sanguine view when it comes to inflation. What taper timeline are you anticipating, and what are the implications then for ASEAN? As noted in a recent note out from Maybank Kim Eng, in the past, after the GFC, we've seen ASEAN central banks moving ahead of the Fed.
So unfortunately, this recovery is a bit more uneven, a bit more bifurcated. And, it would have been fine if the Fed was going to taper when ASEAN growth is on a firmer footing. But I think the risk is that, given the very lopsided recovery right now, the Fed may move ahead with tapering probably by early next year, is our best guess. And hopefully, if growth picks up and some of the lockdowns are relaxed, ASEAN may be in a better position to withstand that tapering. But there's still a risk, right? Given that growth is lagging behind, and that the currencies in ASEAN could come under pressure if the Fed starts, tightening prematurely, because I guess the ASEAN bonds market, a lot are still, fraction are still in foreign currencies, and that will feel some of pressure. But I think it's important to highlight that probably the kind of tantrums that we saw in 2013, there won't be a repeat, right? There could be a mini kind of taper tantrum, but when you look at the positioning by foreigners, it's very light compared to then. You look at the foreign exchange reserves, it's increased by 120 billion since the start of last year.
So these buffers in place to perhaps reduce that vulnerability to the Fed taper tantrum potentially. Now, when it comes to ASEAN, you see Singapore as notching the fastest pace of growth. Where does that put the MAS with its policy?
So I guess the MAS, if there's any tightening from ASEAN, will probably be the first to tighten. They will tighten via the exchange rate. Currently, the headline inflation has been picking up, but core inflation is still below 1%. So chances are, come October, I think they'll probably still remain neutral. But there's a chance, that probably by early next year, that inflation pressures picks up, and it's not just coming from the rising, food prices, gasoline prices, but also is showing up in some of the services costs, right? The labor market is pretty tight. So I think you hear complaints about whether it's construction costs and labor costs are starting to creep up. So yes, it will probably be Singapore that will be the first to tighten within ASEAN.
Now, we have seen inflation pressures moderate for the Philippines. We get a BSP decision out next week. How likely are you seeing a triple R cut looking on the horizon?
I think that looks pretty likely. I think there's certainly room to cut reserve requirements a lot further. Growth is extremely weak in the Philippines. It's been hit hardest, and in part because of the harsh lockdowns. And also, I think when you look at the Philippines, you look at the loan growth is actually slowed the most, right? Philippine loan growth is actually contracting up in a magnitude of about 5%. So I think that's a bit of a worry, and I think the reserve requirement would help.
Now, there's a potential that Thailand may see a back-to-back annual contraction. What levers does the Bank of Thailand have then at its disposal to support the economy? You have fiscal levers perhaps looking more likely versus monetary policy. But there is more chatter that a rate cut may be in the offing after the dovish hold from the BOT this week.
Yeah, I think that's very possible. I mean, I think the issue is that the policy rate is actually pretty low at 0.5%. So even with this cut, it's probably not going to be very, effective. So I think the heavy lifting is really on the fiscal side, and the government will probably have to expedite their spending. The markets is allowing the exchange rate to adjust. In any case, the Thai baht is the worst performing ASEAN currency. I think this year is probably down more than 8%. But that's fine. Inflation is low, so that's not an issue. And I think the weaker baht will actually help exports and cushion the pain from, of course, the tourism slump.
Indonesia's GDP bounced back in the second quarter. What indicators are you looking to look at underlying momentum given the virus curbs that are in place for Indonesia? And have we seen a curb when it comes to inflows given that backdrop?
Yeah, so I think growth came back. It was a decent pace in the second quarter. We had to revise down the growth forecast, unfortunately, to about 4.2% for the full year, given the recent lockdowns and the very high COVID cases. So the lockdowns have been extended, but I think slightly less restrictive. Still, there's a risk of that being extended indefinitely, right? So that is a concern. But bear in mind, Indonesia is the other country besides Vietnam and Singapore that's actually now where the GDP is actually above pre-pandemic levels. And I think we expect that to remain so. In Jakarta and Bali, the vaccination rate is higher, so that helps. I think it's closer to 70%. I think one of the bright spots in Indonesia, which is kind of hidden by all the pandemic news, is actually the FDI side. Because when you look at the first 6 months, FDI is still, it's actually rising. From a year ago, it's actually pouring in. It's going into some of the auto space, for example. So I think that will help cushion. And of course, there's some ongoing tax cuts on the corporate side that will also help. And I think the Bank of Indonesia has actually relaxed a lot more dramatically and quite significantly to help revive lending. So I suppose the Philippines, where loan growth is contracting 5%, I think Indonesia's loan growth is still creeping up, maybe 3, 4, 5%. In part because they relax also the down payments for cars as well as properties.